Welcome to Creamer Media's Resources Watch, a weekly video roundup of the events and people making and shaping the news in the mining industry. This week, Kumba exceeds its 2014 production target but feels the export price crunch. South Deep hits a low point in 2014 as skills deficit and downtime bite. And Universal aims for mid-tier status through a portfolio expansion. JSE-listed iron ore miner Kumba Iron Ore exceeded the 35 million tonne production target at its Sishen mine in 2014, owing to the successful implementation of a recovery plan for the mine.
We're very pleased to report production of 35.5 million tonnes, up 15% and above our guidance of 35. This was the result of a successful implementation of our turnaround plan. The level of exposed ore increased by 24% during the year, and we expect further increases in 2015 and 2016.
Despite the implementation of a strategy aimed at buffering gold producer Goldfields from an enduring low gold price environment, the company said that its key South Deep mine had been pushed to its low point in 2014.
I think 2014 can be seen as a low point for South Deep, and 2015's forecast is anticipating about a 15% improvement to 228,000 ounces. The other thing we're doing, together with Nico Muller, who's with us today, the new Executive Vice President and head of the South Africa region, we're focusing on the short term and getting the basics right in the short term. If we can do that better, I think that will give us better confidence for the long term. So we're not going to be fixated about long-term targets today. We're going to be more fixated about achieving short-term delivery, which is something that's been difficult for this operation to do in the past.
ASX-listed coal miner Universal Coal is considering the acquisition of 4 thermal assets, with an announcement about the acquisition of one of these greenfield assets from an undisclosed mining major expected soon.
Last month, Mining Weekly visited ASX-listed junior coal miner Universal Coal's Delmas-based Kangala mine in Mpumalanga, where the mine's general manager, Petri Erasmus, provided us with some insight into the status of the project's operations.
Well, in the past 6 months, we have moved out of the box cut and we have focused on the south side. We have now taken 2 additional cuts and we've moved actually into the north side as per our mine plan. We have kept our targets to produce our coal to Eskom, and we've also ensured that our contract with Exxaro has upheld with our export coal that we've shipped through the signing of Leeuwpan. In the past 6 months, we've upgraded the beneficiation plant. We have increased the throughput to a 4.8 million plant. We have also added additional stockpile capacity to ensure that that will keep us through the rainy season.
Mining Weekly was also provided with exclusive access to various parts of Kangala's operations, including the mine's open cast pit and beneficiation plant.
I'm standing in Kangala's 900-meter long pit, which is subdivided into 100 by 40 meter blocks. Kangala's coal beneficiation plant has a 4.8 million tonne capacity. For Creamer Media, I'm Milan Solomons reporting from Kangala Mine, Delmas.
For mining news as it breaks, stay logged onto miningweekly.com and register for our free daily newsletter.